This video series is Integrated Financial Planning, Developing Effective Financial Plans. We've been looking at different financial planning frameworks and processes, and the topic for this video is Financial Planning Area of Investment Planning. Just a quick review of the professional competency profile. There are 6 financial planning components or areas: financial management, investment planning, insurance and risk management, retirement planning, tax planning, and estate planning. So the topic for this video is we're going to be looking at investment planning. Again, going through the elements of the competency, where 1, we gather and prepare quantitative information, gather qualitative information, that's in the collection stage. Then we move over to the analysis, where there's 2 parts. 2.1 is assesses the client situation. 2.2 is considers and evaluates strategies. And then finally we move to the recommendation. Of course, 3.1, develop recommendations to help optimize the client's situation. So here we are in the professional competency profile. We're looking at the graphic. So you can see here for investment planning, falling under the category of gathers and prepares quantitative information. What is the quantitative information we're looking at? Well, 1.104 is gathers information regarding the client's assets and investment holdings, which makes sense because we're in the area of investment planning, so we're looking at the investment holdings. 1.105 is prepares a detailed summary of assets and investment holdings. 1.106 is determines client's current asset allocation. Again, you have to then study and understand what is asset allocation. It's basically the mix between stocks, bonds, cash, those traditional asset classes, and perhaps non-traditional asset classes, plus real estate, etc. Anyhow, 1.107 is identifies current and projected asset and investment cash flows. And finally, 1.108 is identifies available contribution room. Okay, so looking at that, again, this is just a quick summary. If I looked at that 1.108, what do they mean by identifies available contribution room? Well, I can go into the other document that has the more detailed information with regards to the competency profile and the elements of competency. So here I am in that 54-page document, again, in the section of investment planning. So investment planning focuses on the client's assets and how to best manage them according to the client's investment risk tolerance and objectives. This planning involves all of the client's investment holdings, which can include cash, fixed income, equity, real estate, and commodity-based assets. Investment planning decisions will impact the client's ability to meet financial goals related to major purchases, as well as education funding, retirement, tax, and estate planning. Okay, so if we scroll down, we can see here there's the collection area. 1.104 collects information regarding assets and investment holdings. We could read more about that. The detailed summary of assets and asset holdings, and then determining the client's current asset allocation. Okay, but again, if we scroll down into the 1.108, as I pointed out, identifies available contribution room. What exactly is that talking about? Well, FP Canada's certificates gather details about available contribution room for registered plans such as TFSAs, RRSPs, RESPs, and RDSPs. Identifying available contribution room can provide planning opportunities for the client, as well as avoid excess contributions to registered plans and the resulting penalties. Okay, so again, just going through that process where number 1, I look at the financial planning area that we're going to look at. Number 2, I look at the graphic, the one page that gives me a summary. And then step 3, I'm going to go into and look at the more detailed document and read a longer description about what that element is doing. Then, of course, I got to get into my education in the area. What are they talking about? TFSAs, tax-free savings account, and RRSPs. How do I calculate the contribution room available? So there's a lot of knowledge. This is just showing you what's required that a financial planner needs to understand. We're not yet getting into the education part, okay? Okay, what I want to do on this slide, and I'm not going to do it for every financial planning area, but I just want to show you that, we've been talking about changes in Canada to the program effective January 1st, 2020, and that there's changes to the competency profile. So, I'm just using investment planning, the second video out of the 6 financial planning areas, just to show you an example of what some of the changes were. So down here, we're looking at 2019, and if we look at gathers quantitative information, you can see that there's 3 elements. So quickly, if I look at the 2020 in terms of gathering the quantitative information, 1, 2, 3, 4, 5, there's more elements. So 2 have been added, okay? So again, collects information regarding the client's assets and investment holdings. Well, this is pretty similar to before 2019, collect information to prepare a detailed statement of investment holdings. Now they're kind of adding the word assets. That would include other assets, not business assets, etc. So I guess they're sort of widening the category by including the word asset and investment holdings. Anyhow, you can see a detailed summary of assets and investment holdings. Here, the second one was a client's current asset allocation, which shows up here as current client asset allocation. So that's basically the same. And then identifies the cash flows available for investment. Here it's current and projected asset investment cash flows. Okay, so a little bit extra English regarding current and projected cash flows. And then finally, you can see this 1.108 identifies available contribution room. Well, that's really a new element that wasn't there before, and that's why I just previously wanted to show you that I went into the longer document and said, okay, what exactly are they talking about now that they've added this identifies available contribution room? Well, it's the calculations that you have to be able to understand and make for TFSAs and RSPs and RESPs, etc. Okay, so then you can see in the 2020, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, kind of similar. 1, 2, 3, 4, 5. Oh, 1, 2, 3, 4. So something's been added here. 3 elements here versus 2. And 2019, before the changes, there's actually 4 in terms of developing the recommendations and only 3 here. So again, I'm not in the habit of looking in the past very much. I'm always looking forward, but I just wanted to take a quick minute so that people understood that there were changes to the competency profile and the elements of competency, and that's just an example. That's throughout all the 6 areas. There's been some changes. The biggest changes, in fact, have been in the retirement planning and the estate planning. Okay. Again, that's one of the reasons why I created a quick mind map, because here we are in the the area of investment planning, the 3 steps: collection, analysis, and recommendation. So here I am in the collection. Gathers quantitative information, gathers qualitative information. I can, it's just showing me, instead of a rows and columns, it's just showing it in a bit of a graphic. Here on the analysis, assess the client situation, 2.1, identify and evaluate strategies. So again, I can, expand the level, and I can look at the elements. Down here, I can look at the elements. And finally, with regards to the recommendation, I can expand it, and I have a nice sort of graphical representation. And as I said, the reason why that helped me is that if I then I printed these out and I put the 2 sheets side by side. So rather than scrolling through, those 2 PDF documents side by side, actually seeing a picture where there's 5 boxes instead of 4, or 5 boxes instead of 3, it was really quick to eyeball where those changes are and zoom in. And as I said, for people that are just starting down the road to their financial planning education, then you don't need to be concerned about the changes. You just have to be concerned with the new curriculum. But for some of those that are, for people that are in process and are still studying and have to get up to speed on, hey, what's changed since I started? Well, then, as I said, there's a couple of techniques to do it. So here I am in my 2020 mind map for the competency profiles. And again, there's the quantitative information, gathering the qualitative, and I can expand those trees. And, as I said, print that out, and I very quickly put them side by side, and I could spot where the changes are. Okay, so just different techniques to be able to go through the material and start to absorb it. Okay, so carrying along with this investment planning, I'm still in the collection mode here. 1.2, gather qualitative information. So let's just see what the elements are there. 1.204, client's investment experience, attitudes, and biases. Again, this is qualitative, so it's trying to investigate the client's experience and attitudes. 1.205 is the client's return expectations. Everyone would like to have 20% return. Sometimes there's a gap between expectations and reality, and some education that needs to be done. Okay. 1.206 is determines client's investment constraints. Those are such things as liquidity constraints, legal constraints, time constraints, tax constraints, and unique circumstances. Okay. So there's often some constraints, investment constraints to a client. 1.207 determines the client's capacity, tolerance, and composure related to investment risk. When we look at investment risk, we're talking about willingness and ability to take on risk. Sometimes people are very willing to take on risk, but they don't have the ability. Or sometimes people have the ability to take on more risk, but they don't have the willingness. And sometimes, again, that's an area for education. 1.208 determines the client's degree, desired degree of involvement in the investment planning process. So then moving on here to the analysis section, 2.1, where you assess the client's situation. You can see there's some elements have been added. 2.106 determines characteristics of assets and investment holdings. 107 determines the implications of acquiring or disposing of assets. Sometimes there's tax consequences of disposing of assets. Again, that's why it's called integrated financial planning, because if you do something in one area, it often affects another area. Okay. 2.108 calculates required rate of return to reach client's objectives. Again, that's why you have to understand time value of money calculations. 2.109 assesses whether investment return expectations are consistent with clients' constraints, required rates of return, investment risk, capacity, need, tolerance, and composure. So again, you're putting together a picture of what the client owns, where they would like to be, and you're assessing that against their tolerance for risk. 2.110 assesses whether asset allocation is consistent with client's constraints, required rate of return, investment risk, capacity, need, tolerance, and composure. Okay, so you're looking at expectations, and you're looking at the asset allocation and seeing whether it matches up. So moving here to 2.2, identifying and evaluating the strategies under the analysis section. 2.207 considers potential investment planning strategies, evaluates advantages and disadvantages of each investment planning strategy, and then again prioritizing the client's investment planning objectives and needs. And really that's you go through this process, collecting qualitative information, doing the analysis, assessing the client situation, identifying and evaluating strategies, and ultimately it's coming out in the recommendations that's going to go into the integrated financial plan under the section for investment planning. And for the recommendations, 3.104 formulates investment planning strategies, recommends optimal investment planning strategies, and then again 3.106 prioritizing the steps to assist the client in implementing the investment planning recommendations. Okay, so again, I just use my mind map. You could use the instead of rows and columns, you can use the PDF document, copy it and put it into Excel for yourself. I put it into a mind map because I like working with the data. I could color code something, for example here, calculate the required rate of return. Well, what I can do is I can change the node style, and I can change the background and put that as a yellow and say, okay, that's an area that I need to come back and work on. Of course, I could do that in Excel as well, changing certain cells. But again, I'm liking the interactivity and flexibility of this mind map through the Mind software, free with it's a free Google app. Okay, the next part of this video, again, I'm at the FP Canada website, www.fpcanada.ca, and it's /BOK because we're looking at the body of knowledge. Okay, so we've looked at this before. The financial planning body of knowledge describes knowledge expected of CFP professionals and FPSC Level 1 certificates, which is becoming the QAFP qualification January 1st, 2020. And again, there's 12 topics, financial planning profession and financial services industry regulation, financial analysis, which is a little bit related to the financial management, the first financial planning area. Then credit and debt, registered retirement plans, government benefit plans, registered education and disability plans, economics, investments, taxation, law, insurance, and human behavior. So again, I wanted to click here on the investment section and to show you that there's, again, we're not going to get into lessons with regards to these areas, but there's a lot here. There's a lot to learn, okay? So you can see, and it's really required at that level 1 or QAFP level. Foundations of investments, investment marketplace, investment objectives and constraints, investment return and risk, asset classes, asset allocation, investment structures. I'm just going to scroll up a little bit here. Investment styles, investment accounts, investment buying and selling techniques, and leveraged investing. And you can see all of these elements, topics and subtopics are required at that first level. Again, I wanted to point out that there is case studies. Okay, so we can click on the case studies, and you can see here's the various case studies. Some are really at the required level for level 1, and some are CFP required. Okay, so again, not going to go through all the case studies yet, just kind of click back. And I'm not going to drill down on all of these, but let's just drill down on a couple of the first, a couple of these and see what the required technical knowledge is. So in terms of the foundations for investments, I'm going to click here and I'm going to read more. And again, this is just giving a laundry list. It's not getting into the actual content that is, that you need to learn. So let's just look through here, kind of quickly. Knowledge of expected of both CFP professionals and the FPSC Level 1 certificates, or QAFP. So you identify roadblocks to engaging in investment planning, such as lack of knowledge, cost, personal attitudes. So again, that's some lack of knowledge and attitudes. That's qualitative information. Explain objectives of an investment plan, such as minimize risk, maximize return, risk tolerance, appropriate asset allocation, and appropriate investment choices. So you can see here, I'm not going to read all of these, but explain the factors that may affect an individual's investment plan, such as time horizon, risk tolerance, investment objectives, liquidity needs, type of income. So there's a lot there. A lot also down here in terms of explaining each of the factors may impact the suitability of an investment. Again, time horizon, volatility, risk tolerance, investment objectives. And what's really important, again, is to understand, we saw that there's a element in the competency framework where you need to calculate. And when it says you have to calculate, you need to find the value using mathematics. And that's what will be expected of you on the test if the learning outcome statement is to calculate, okay? And here, define, identify, explain, compare, estimate, calculate, convert, evaluate, interpret. That's the glossary of the verbs in terms of the command words. So you can see here, explain. You just have to need to explain, which is to make clear the meaning of, to describe something in more detail, or reveal relevant facts or ideas. So if there's an exam question that was related to, explaining risk tolerance, well, there's no calculations that need to be made in that case, okay? So just going back here, investment marketplace, skip over that one, objectives and constraints. Maybe let's look at the asset classes here. Well, you can see there's lots more to read on cash, foundations of asset classes, fixed income, real estate, equities, which are stocks, and alternative investments. So just picking one here like equities, if I drill down, you can see there's lots of info. So again, you need to keep drilling down and say, okay, what do I need to know with regards to the areas of equities? Understand primary investment objectives, typically associated with the asset class of equities. That would be growth of capital. Long-term on average, nothing is given better returns than stocks. But the higher the return, the higher risk. If you're going to invest to grow your wealth, to grow your capital, you also have to expect to put up with the volatility, okay? So again, primary investment objectives, preservation of purchasing power. If that's all you want to do, then you can accept a lot lower risk and a lot lower volatility by investing in something like a government T-bill, where the rate of return is just going to be a little bit better than the rate of inflation. Some people have the primary investment objective of income as they're getting towards retirement, etc. Okay, so again, not going to read through all these, just giving you some examples of the knowledge that is expected and some of the command words. Okay, so for each of these, there's a lot that you need to know. So again, looking at the types of share capital, voting shares, non-voting shares, subordinated shares, restricted shares, lots that a financial planner needs to be familiar with in each of these different areas. So just going to click back here, probably almost done. Asset allocation, let's see what they've got there. Just going to read more on asset allocation. Just 1 second, scroll down. Defining asset allocation, explaining the importance. Different types of asset allocation, such as strategic, that's long-term. Tactical is more short-term. Again, so you can see this is the knowledge that's expected. It's just giving you the bullet list of what I might call the learning outcome statements. And, to get on top of this, to be able to become exam ready, you need to study the content through a content provider, okay? Looking here at rebalancing of a portfolio. So there's lots there, okay? So again, not going to go through all of this, just going to click back. So here we are in investments, and you can see structures, investment styles, investment accounts, leveraged investing. That means using debt to buy certain assets, okay? All right, so that's that basically, again, these are kind of just summary overviews of the structure of the financial planning area of investment planning, looking at the competency profile, gathering data, collection of data, analysis of data, and then recommendations. A little bit of how that changed from 2019 to 2020, just as kind of an FYI. Then we looked, at more detail in terms of the financial planning body of knowledge. Okay, so that is almost pretty much wraps it up for this introductory video to investment planning. Okay, as a CFA charter holder, in addition to being a CFP certificate, I like the area of investment planning. It's sort of one of the key areas. It's where I started my career. It's where a lot of young people start the career. So I just want to show you that, again, on the FP Canada website, you can click here, find a financial plan, and it brings you up this search functionality. You could type in, for example, Stevenson, just get rid of my first name, and search by name. There, my legal name is Edward Stevenson. You know that from my CFA badge, my digital badge. But if you click on it, there I am, Edward Stevenson, CFP professional, George Brown College. That says first certified in 2017, not exactly right. I let my certification lapse while I worked overseas outside of Canada because there was no financial planning affiliate or association, but I reinstated myself. You can see that's my office phone number, my office email, which is fairly easy to find. Of course, I work at George Brown, St. James campus. There I am downtown. And you can click on my faculty bio here at George Brown College. There I am again, Ted Stevenson, a little bit of my biography, my areas of expertise, some of my career highlights, and then you can see I've had a couple of publications. I had an article, How to Choose a Wealth Manager in Forbes Middle East, for example, an article in Banker Middle East. I've had contributions to the Cliche Times. But if I click on this one, How to Choose a Wealth Manager, because we're talking about investment planning, you can see it was about a year ago, April 2018, issue 70, pages 68, 69. It was page 58 in print. Click on that. So there it is, the Forbes Middle East from April 2018, about a year ago. Yeah, and if I click to page 68, you can see Thought Leaders Ted Stevenson, How to Choose a Wealth Manager. And I'm just going to read this first paragraph that I really like because it's kind of summing up, it's a good time now looking at investment planning and financial planning just to look at this first paragraph. So when lives are in transition, money is in motion. Wealth management is the management of assets and liabilities throughout life by utilizing a variety of philosophies, processes, products, strategies, and solutions that are tailored to each individual or family based on their various characteristics of income, wealth, age, social status, investment knowledge, and unique psychological differences. So a pretty long paragraph. Choosing the right wealth manager depends not only on your current financial situation, but also on the level of value added that is required. As we move up the value chain, there is a greater body of knowledge required, and both the business model and relationships become more complex. Okay, so just want to show you, I have a little bit of an article here, Forbes Middle East from a year ago, how to choose a wealth manager. And I'm just going to finish this video by reading the last two paragraphs. And by the way, that's one of the study techniques that I use when I need to go through a lot of content very quickly. I like to often read the opening couple of paragraphs and the last few summary, and usually you get a lot of the heart of the topic. Anyhow, so the last second to last paragraph here is a big challenge for choosing a wealth manager, or you could say financial planner. Just interchange the word. A big challenge for choosing a financial planner in any country is finding a professional that you can trust. A recent CFA publication titled Future State of the Investment Profession states that trust and value in wealth management or in financial planning are interconnected. For the end investor, value will relate to the perceptions of outcome relative to the expectations. Again, the simple equation is credibility plus professionalism equals trust and value. So disappointment comes when there's a gap between expectations and reality. So if someone has the expectations of a 20% return and the reality is long-term on average it's only 10%, you need a financial planner has to educate, or the client is going to suffer disappointment because there's the outcome is different relative to their expectations. And that's why integrated financial planning, one of the skills is communication. Okay, finally, the last paragraph is no wealth manager or financial planner can guarantee a specific result, but they should have the expertise and professional acumen to educate you on realistic outcomes so as to minimize the gap between expectations and reality in achieving your financial goals. You should be confident that your advisor represents the right blend of industry competence and professional integrity. You should be certain that you're being counseled and not sold. Okay? And that is really the conclusion for this video, which is looking at the financial planning area of investment planning. And that's the end of this video. The series is Integrated Financial Planning, Developing Effective Financial Plans. And what we're looking at here was the financial planning area of investment planning. So thank you. Thank you very much.